Let us now look at, friends, what are the steps in case of DCF, discounted cash flow method. Understanding discounted cash flow method, in my view, covers practically 40% of your job. So what are the steps in case of discounted cash flow valuation? So how do we start? Number one, you need to ascertain explicit period and the terminal period. And then what you need to do, estimate the growth rate in earnings during the explicit forecast period. अब देखिए क्या होता है, ज़रा समझ के लीजिए, फिर आपको ये ध्यान में आएगा कि ये explicit period क्या है और ये terminal period क्या है. Please understand, when we are doing valuation using the discounted cash flow, what do you do in case of discounted cash flow? In case of discounted cash flow, you discount the future cash flows. But remember, how can you discount the future cash flows of a company which has got an infinite life? So if a company is having a life of 5 years, 10 years, doing the discounted cash flow is very easy, because just find out the cash flow for 5, 10 years, that is the life of the company, and the matter is over. But if a company is having infinite life, how do you do the discounting? Because infinity, cash flow is going to be for infinity. And that is where, friends, you have to use the two-stage discounting model. And what is two-stage discounting model? Two-stage discounting model is कि अगर आपको एक कंपनी का वैल्यूएशन करना है, and this company of course is a going concern, so what you will need to do, you will need to break the period, the life or the period of the company into two parts. The first part is known as explicit forecast period. यानी कि ये जो पीरियड है जब आपको लगता है कि ये कंपनी की जो ग्रोथ है वो एक्स्ट्रा ऑर्डिनरी होगी, और देन यू रीच टू अ पॉइंट जब वो कंपनी की ग्रोथ स्टेबलाइज हो जाएगी. सो द पॉइंट एट विच द ग्रोथ ऑफ द बिजनेस, ग्रोथ ऑफ द कंपनी स्टेबलाइजेज, फ्रॉम दैट पॉइंट एंड बियॉन्ड starts the terminal period. So what you do, when you want to use the discounted cash flow, you need to break the company into two parts, the explicit forecast period and the terminal period. And remember what is then, please pay attention because this is very, very important. Terminal period does not mean that on this date the business will terminate. No. Terminal period means that this point onwards the growth of the business is going to be stabilized, and that is why you use the two-stage discounting model. So first stage comprises of explicit forecast period and the second stage comprises of the terminal period. तो जब आप discounted cash flow DCF method use करना चाह रहे हैं, सबसे पहले आपको क्या करना पड़ेगा, you will need to ascertain what is the explicit forecast period and what is the terminal period. Now as a valuer, how will you do it? You will not know it by yourself, of course. So if you are doing the valuation for a company, you will need to discuss with the company. From the company, you will need to find out as to how do you see the growth of your company happening. And they would tell you as to what can be the explicit growth period and what can be the terminal period. So then you find out the growth rate for both those periods. Now what you do? Now you estimate the cash flow, isn't it? You are using the discounted cash flow. So for using the discounted cash flow method, you obviously need the future cash flow. So you will need to do the calculation of the future cash flows. How will you do the calculation of the future cash flows? You will do the calculation of the future cash flows in the same way as you will do for budgeting of the company. Same way as you will do capex planning for the company. So find out the future cash flow projections for the company. And then of course you will also find out for the terminal cash flow, determine the cost of capital. Again, remember friends, this is again a very tricky area, and that is where you really need to be very, very sound. What is cost of capital? Remember, your cash flow can be of two types. Your cash flow can be for the firm your cash flow can be for equity. Your cash flow can be for the firm. Your cash flow can be for the equity. इसका मतलब क्या है? इसका मतलब ये है, if you want to find out present value of cash flow which is for the firm, what cost of capital should you use for discounting? So if you want to find out present value of cash flow which is for the firm, FCFF, which is technically known, the cost of capital that you will use for the purpose of discounting is going to be WACC, weighted average cost of capital. And if you have to use the discount, if you have to find out the present value of the cash flow which is for equity, which is FCFE, free cash flow for equity, then you will need to use the cost of equity. And that means you will need to have a very good understanding of cost of capital. And that is where people tend to make mistake. Why? Because the figure which is to be cash flow which is to be discounted is the cash flow which is to be discounted is cash flow for the firm, and the rate which is being used for discounting that cash flow is cost of equity. Your answer is going to be completely wrong. Vice versa, your answer is going to be completely wrong. पढ़ते पढ़ते ध्यान में नहीं आता है, सुनते सुनते मुझे शायद आपके ध्यान में आ जाए और आपको हमेशा के लिए याद रहेगा. And this is what you must understand. So find out the cost of capital, and then now you know you have the cash flow, you know the cost of capital, so you should be able to compute the present value for both the periods. And now what you do, add the present value of the explicit forecast period and the terminal period, add them together, that becomes your business value. Please pay attention. If you are using free cash flow for firm, so by using free cash flow for the firm, what you will get the enterprise value. And if you are using the free cash flow for equity, what you will get is the equity value. And what is enterprise value? What is equity value? Enterprise value is the value of equity plus debt together. Enterprise value is the value of equity plus debt together. Equity value is value of equity only. That means what? That means if you add debt value to equity value, what you will get is the enterprise value. In other words, if you minus from the enterprise value the equity value, what you will get is the debt value. So this is what you will get at the point number 6. And then of course you will need to make some adjustments. That is what you will need to read. But remember that you have to make some adjustments. And then of course I have explained to you as to what is the enterprise value and what is the equity value. And then of course whatever value you arrive, enterprise value, you arrive at the enterprise value, divide the enterprise value by the number of shares, you get the enterprise value per share. You got the equity value, divide the equity value by the number of shares of the company, you get the equity value per share. So this is how these are the steps, friends, as far as the DCF method is concerned, finding out value using the discounted cash flow method. Please remember, discounted cash flow method gives you intrinsic value.